Hello there, my name's Bitcoin Mamo. In this video, we're going to go over some of the basics of Bitcoin and also look at the 4-year cycle. I am making this video for my uncle and auntie who are looking at getting into Bitcoin for the first time. I think we are at a good price to enter the market. So we'll go over some of the basics. We will look at the Bitcoin halvenings, Bitcoin adoption compared to other technologies, and as we mentioned, the 4-year Bitcoin cycle, which is based around the Bitcoin halvening. So I've just got pulled up what is called the line chart for Bitcoin, and we are on a weekly time frame here, which just basically means each of these points is 1 week apart. And the price level here is determined by what the Bitcoin price is at the end of that week. So you can see this is the entire history of Bitcoin here. It does go back to around July of 2010. Bitcoin was created in January of 2009. We don't have some of that data as there weren't exchanges around where you could buy and sell Bitcoin. It was very early. So this is the earliest data we have here on this chart. We can see right at the start here, Bitcoin did get down to around 1 cent here. Currently we're at 16,800. The highest point for Bitcoin was approximately around 70,000. So this entire chart spans about 12 and a half years. And again, Bitcoin has been around for about 14 years now. We might notice we do have these big run-ups here and these big corrections. And Bitcoin tends to do these cycles, again, based on that 4-year time frame. First thing to note here is I do have these green lines on the chart, and the distance between each of these lines is the same distance. It's approximately 4 years. We can see when we do space out these lines equally, this did get approximately the top of this run. This next one does get the top of the next run, and this one also got the top of the last run here. So we see it does get the peaks of each of these runs. We can pretty much use this to divide Bitcoin into these 3 cycles here. Early on, there weren't that many users here, so we're not going to look at this cycle as much. So why do we have these 4-year cycles for Bitcoin? What is all based on the halvening for Bitcoin? What is the halvening? When Bitcoin was first started in January of 2009, there were no Bitcoins in existence. They had to be mined. And the creator, Satoshi Nakamoto, who no one actually knows who that is, he mined the first Bitcoin. And mining is basically solving a puzzle by guessing at the answer. And this happens automatically when you are mining. It's guessing an answer many times. And when it does get the correct answer, there is a reward to the person mining the Bitcoin. And when Bitcoin started, that reward was 50 Bitcoin. And over the entire history here, basically that reward goes to a miner every 10 minutes approximately. Early on, 50 Bitcoin was introduced into the supply and into existence every 10 minutes. And this is just the way that Bitcoin works, and new Bitcoin comes into the system. So we can see here, Bitcoin started in January 2009. The reward was 50 Bitcoin paid to the miner that did solve that puzzle correctly. And as mentioned, every 10 minutes, this reward would be received on average. And so every day around 7,200 Bitcoin would come into existence, again, starting from 0 on the first mined coin. So the way that it works out, that every 10 minutes a miner gets this reward, is there is a difficulty rating and a hash rate. I won't fully go into that, but that does get adjusted depending on the number of people mined. And so it works out on average every 10 minutes, a miner gets that reward. So 7,200 Bitcoin every day actually works out to around 2 million Bitcoin a year. And after 4 years, there was about 8 million Bitcoin mined, and that was the total amount of Bitcoin in existence. And also in the Bitcoin code, there is a fixed amount of Bitcoin that can ever exist. That is 21 million Bitcoin. They can't be more created. And that's what makes it different to the financial system. Obviously, when we see stock market crashes, the Federal Reserve prints money, so more money comes into existence. And when they print too much, we get inflation like we do have now. But it isn't a fixed supply, and that's why the price of goods goes up and then our wages go up. So it is a totally different system, a fixed supply. and the price goes up because there are more and more users adopting Bitcoin. But let's get back to the halvening. So as we said, Bitcoin started in January 2009. 50 Bitcoin was the reward for the miner that solved that puzzle. Again, that happens automatically with the machine you're using by guessing at an answer. And then 7,200 Bitcoin was mined per day, and again, about 2 million per year. And I mentioned the 4-year mark, there was 8 million, because now we're going to talk about the halvening date, and it's programmed in the Bitcoin code that approximately every 4 years we experience a Bitcoin halvening. So what is the Bitcoin halvening? Basically, what it is the reward to that miner that solves that puzzle gets cut in half every 4 years approximately. And it is based on different things, but we won't go into that. All you need to know basically is it's approximately 4 years each halvening. As we go to the next halvening, which happened in 2012, we saw that the reward for Bitcoin was reduced to 25 Bitcoin. And again, still every 10 minutes, a miner would solve that puzzle. And instead of getting 50 Bitcoin, now they get 25 Bitcoin. So we see the new supply coming into existence is actually getting reduced. And this is sort of deflationary when looking at the new supply. You can think about this like gold and mining gold. If all of a sudden they were only finding half the amount of gold, then you would expect the price of gold to move up as the new supply seems to be decreasing over time. So we had the first halvening date here, 2012, approximately 4 years after the start of Bitcoin. And now that reward is cut in half. Now we're getting 3,600 Bitcoin a day rather than 7,200. And so that's about 1 million a year and 4 million over the next 4 years. And so after 8 years, about 12 million Bitcoin was mined out of the 21 million that could possibly exist. And just to show the effect of the halvening here, this was the 2012 halvening. We saw Bitcoin was around $13 here. And not long after that halvening, about 4 months, that's when we saw the really big run up from around that $13 to $240. And this is the effect of the halvening on Bitcoin. The next halvening was in 2016, 9th of July. And again, the reward was cut in half. Now the miners receive 12.5 Bitcoin each time they solve that puzzle. Again, every 10 minutes approximately. Now only 1,800 Bitcoin per day was coming into existence. So it gets halved every 4 years. And again, we see the response with the price action. The halvening here in the middle of 2016, Bitcoin was around $670. And it did end up going to 20,000 per Bitcoin at the end of 2017. So about a year and a half after that halvening date. But we can see it generally takes a little bit of time, and then that new supply shock kicks in. And to the last halvening we had here, that was in 2020 in May. And again, we saw that reward cut in half, now 6.25 Bitcoin. Remember, the first reward was 50 Bitcoin, then 25, then 12, now 6. So every day, 900 Bitcoin came into existence. And again, we can see when that halvening took place in May of 2020, Bitcoin was at around 8 or 9,000 here, and it ended up going to around 70,000 at the end of 2021. So it consistently has that big effect on price. And currently, with all that Bitcoin being mined, around 19 million Bitcoin has come into existence through mining. There are only about 2 million left to be mined, and this will actually take quite a long time as that reward gets cut in half every 4 years. The next halvening won't be until 2024, around about March or April. There's no way to know exactly, but it would be approximately that 4-year gap. And the reward will then be 3 Bitcoin and about 450 Bitcoin coming into existence each day. And we should see a similar thing after that halvening. We should see quite a big run during the next year and a half after the halvening date, which would put us into 2025. So I hope that explains the halvening for those that don't know about it, those that are new to Bitcoin looking to get in for the first time. So I just want to look at some other technologies, and this is back when video games were starting out in 1977. And we see some newspaper articles, video games, just a passing fad, top toy company executive says. So newspapers are quite often wrong. And here's another one. When the internet was starting to get adopted, this was at the end of 2000. Internet may be just a passing fad as millions give up on it. And again, we know now how many people use the internet, pretty much everyone. And Bitcoin's very similar. It did get a lot of bad press. People are using it to commit crimes, buy drugs, etc. So any new technology is never perceived as a good thing early on. And we see the same thing with Bitcoin on the news and in the newspaper. When it goes down, Bitcoin's dead, etc. And they've said this many times, and it's still getting adopted with more and more people, and the price is still going up over time. So this chart might look a bit messy. This is basically adoption waves here for different technologies. You can see here the telephone in orange. This is the percentage of US households using that technology. We can see over time how it gets adopted. 20% here after maybe 5 years of the telephone, 40% after 20 years, and so on. Eventually over 80% using it after 60 years. The things got adopted a lot slower 100 years ago. You can see radio got adopted a lot more quicker. The steeper the curve, the quicker the adoption. And then if we look at, say, the color TV, that was quite quick. The microwave oven, we can see within about 10, 12 years, 80% of US households used microwave ovens. And recently here with the cell phones and the internet, we did see quite a sharp curve here of adoption, with 60% of US households using that technology within 10 years. Bitcoin is a similar thing here. We are still very early on, but we can see here, this is a Bitcoin adoption versus internet adoption. So in white here is the internet adoption curve. This is the number of users here on the right side for the internet, and it's measured in millions of people. So we had 10 million people back here when the internet was around in 1993. Again, just look at these white lines for the chart. You can see it reached 100 million users here around 1997. So only after 5 years of being around. And then it reached a billion users here around 2004, 2005, around 12 years after it started. So looking at Bitcoin now in orange, we have the same scale here on the right with millions of users. We see the numbers line up, 1,000, 100, etc. And then we have the time on the bottom here, starting from around 2016, so it doesn't have the data going all the way back. But we can see there were 10 million users of Bitcoin in 2016, and then there were 100 million users of Bitcoin in 2019. We can see it's getting adopted at a rate the same as the internet. These are very similar curves. And so we can assume if we follow this trend, that we'll have a billion people using crypto by around 2025, which isn't that far away. And so this is why I think Bitcoin is a safe bet here, with it getting adopted as quickly as the internet and even mobile phones. And one more picture here. This is the Bitcoin price with this line chart. The dotted line is that internet adoption rate. And we can see the price has been hovering around that internet adoption rate. And this is a bit older here. This was 2020. Bitcoin was around 10,000. Did end up going to around 70,000, as we mentioned in 2021. And looking at this chart, this would put us at around 100,000 sometime in 2024, and possibly as high as maybe 120,000 at the end of the current cycle we're in. But the aim here, if following this curve, is for Bitcoin to eventually reach $1 million around 2032. So if you're buying it now at around 16, 17,000 US, that would be around 60 times the money you invested if you did hold it for the next 10 years. Let's get back to the chart here. Just wanted to put some of that background information in. So we learned about mining, we learned about the halvening date, and we looked at the adoption of other technologies and how Bitcoin is similar to internet adoption. So back to the chart here, that 4-year cycle should now make a bit more sense, as every approximately 4 years, the reward to those miners gets cut in half. So you could say over each 4-year period, the amount of Bitcoin that gets mined is half of what it was from the previous 4 years. By putting in these lines that are approximately 4 years apart, we see it did get the top of this first run, the top of the next run, and the top of the final run. This was at the end of 2013, this one at the end of 2017, this one at the end of 2021. So we can see every 4 years it is pretty accurate. These are pretty much the exact tops. So the next top of the next run would be towards the end of 2025, possibly around October. So let's do the same thing now, just marking the bottom of these pullbacks. And these lines are also 4 years apart. They're the same distance as the green lines are apart from each other. What we see is that this was pretty much the bottom of this major pullback. This was also the bottom of this major pullback. And now we are in that zone after this major pullback where we should see the bottom. And if we just zoom in, we can see this was the low for Bitcoin here at about 16,300 so far. And if history repeats, we should see another run like we did on these previous occasions, going to new highs, possibly around the 120, 140,000 mark. Again, I've marked out the next green line here, which would be the approximate peak, which would be in October 2025. So I've just put in some white lines now. What these white lines are those halvening dates where the reward to the miners gets cut in half. The new supply of Bitcoin coming into existence is cut in half. And we see this first event here. If we just go back, this was where Bitcoin was invented on this yellow line. Ignore these green ones here. We can see after that first halvening event in 2012, how quickly Bitcoin went up after that. The second halvening event here, again soon after that, we saw how quickly Bitcoin went up. And the third halvening event here, again took a little bit, but then Bitcoin did have another big run. And so we're looking towards the next halvening date, which would be around March of 2024. And so we may spend some time in this range here. Once we get that halvening, we'll see that big run up again as the cycle continues every 4 years. So while we're looking at this chart here, it's important to note that we are on a logarithmic scale. What does this mean? It means rather than the numbers here going up equal amounts, like 1, 2, 3, 4, 5, 6, 7, 8, 9, etc., it is actually skewed. So we can see it goes from $2 to $5 to 10 to 20. So approximately it's doubling for each mark here, even though the lines apart are equally spaced. And this is used so we can actually see all of this price data action here clearly. If I just go to the normal scale, the linear scale, we can see it's 4,000, 8,000, 12,000, 16. So it's moving up in a linear scale. These are the same amounts. Each of these lines is the same amount of dollars apart. But if we just go back here to where Bitcoin started, this is why we have to use the log scale. Bitcoin was down at around 1 cent here. And we saw how much it did run up from 1 cent to $18. This was actually a 31,000% gain. This was very early days for Bitcoin, the early adopters that make the most gains. And then we saw this massive correction back down. And Bitcoin corrected from $18 all the way down to $2. So an 88% drop for Bitcoin. And this showed a characteristic of Bitcoin here, where we have these tremendous gains in markets known as a bull run, and these massive crashes known as a bear run or a bear market. So we saw that massive 30,000% gain and then an 88% correction. Of course, corrections can't be more than 100%. That would be the total price. But this is a massive correction here. After that big correction, we saw Bitcoin recovered and we started the next run. And again, the 4-year cycle wasn't really a thing here, but we see the next run here. It did go all the way up here to $160 from $2. So again, a massive gain and 80x. So we put $1,000, it was worth 80,000 up here. And again, that white line is the halvening date. We can see after that, we tend to have these big runs. And it shows just how small this initial run here was, even though this was a 30,000% gain. And that's why we have to use the log scale, because everything looks insignificant after we have the next run. But that wasn't the end. In 2013, we did another massive run, going from here around $80 to $1,000. And look how insignificant this first run is now. Again, a 30,000% gain, but it looks quite small because we did have these big run-ups and the price went from that 1 cent to $1,000 in a short time. And again, what happens after these big runs? We have these big crashes. So after the initial early days of Bitcoin here, as we reach the end of 2013, this is where the 4-year cycle became relevant. And again, looking on the linear scale, we can see how insignificant this run becomes as the price went up massively again, going all the way to 20,000. And we see that just looks insignificant now. And the first one is just a flat line, even though there was 30,000% gains here. So this is why we use the log scale. And I'll just show you the last cycle here. Again, massive runs. It makes this look smaller and the other ones look insignificant. So we have to use the log scale to be able to see all this data on the same chart a bit more clearly. Let's dissect this up a bit. Again, we mentioned the 4-year cycle. The red lines are approximately 4 years apart. The green lines are approximately 4 years apart. And the white lines are approximately 4 years apart. These are the halvening dates. The green is approximate peak, the red is the approximate low. And as mentioned, after this initial run up here, this is where this 4-year cycle started. So we just highlight the part here from the green to the green, peak to peak. You can see this was the start of 2014 and this was the start of 2018. So that 4-year time span, if we were to move this box from the next peak to the next peak, we see it's pretty much the same distance. Again, 4 years, and it captures the same thing, a low, the halvening date, and the next peak. And again, the cycle we're currently in, we see that's approximately 4 years also. So again, just going back to the first cycle here, let's dissect up the actual 4 years of this cycle. So what normally happens? Well, we normally spend 1 year going down for that whole year. We can see here that was the start of 2014 and this was the start of 2015. So we spent a whole year going down here, and I've just highlighted that for each of these 3 cycles. Again, these boxes are 4 years apart. We spend a whole year going down here in the next cycle, the start of 2018 here, and the start of 2019 here. And with our current cycle, this was the end of November of 2021. We can see we have spent a whole year going down, just like the 2 previous cycles. This is 2014, 2018, 2022, 4 years apart. So we have spent that whole year going down now, and now we are approximately in this area, same as this area, and we expect similar things here. So out of that 4-year cycle, we spend the first year going down. So how much did we go down in each of these cycles? The first cycle we dropped about 78%, second cycle 83%. Currently we're down 75% in this cycle. So we see similar numbers between about 75 to 85%. So let's look at the next 1 year period here. That first year we just spend the whole time going down. The next year we do form a bit of a base. It can take anywhere from 3 months to about 9 months here. But we can see this was the start of the next year. I've got it the whole year shaded in grey again. But we did end up going up 113%, even though it doesn't look like much. So you could have doubled your money here during that year. The second cycle went up 130%. If we did a similar thing, maybe 108%, at the end of the year could put Bitcoin around 34,000. Again, it's currently at 17,000. Let's actually look at the time here between the low for Bitcoin after this pullback over a whole year to when the halvening occurs, this white line. This is approximately a year and a half. We can see by the halvening date, we don't quite get to the previous high. We get close to it, but we do make up a lot of these gains. This was 265% gain over that year and a half, leading towards the halvening date. Again, after that, we get that big acceleration to the upside. This second cycle, again, a year and a half from the low to the next halvening date. This was a 200% gain. Again, we didn't get back to the previous high here. We did make up a lot of the gains. And so over the next year and a half, which would take us to approximately March of 2024, and that's when the next halvening date occurs. If we were to see similar gains, it could put Bitcoin up at around 47,000, which would be 3 times your money from these lows after just 1 year and a half. And now the final part of that 4-year cycle. So we looked at from the peak to the low, which was approximately 1 year, and then from the low to the next halvening date, approximately a year and a half. And then the final section, after we get the halvening, the new supply gets cut in half to the next peak. This is where all the fun happens here. This again, this white box is a year and a half of time, 18 months, similar to the previous area here. So 1.5 years, 1.5 years, and 1 year. And that completes the 4-year cycle. So after we get that halvening event, takes a little bit to kick in, about 6 months. Then we see these massive gains. This first cycle, Bitcoin went from $550 to $20,000, a 3,200% gain. Quite crazy. The next part here, again, we had the next halvening date, a 18-month period, and Bitcoin went from $8,000 to $70,000 approximately. This was a 650% gain. We are seeing the percentage gains get smaller as Bitcoin gets more and more adopted. That's because it does take more money to move the price. And at the peak here, Bitcoin was a $1 trillion asset. To put that into perspective, the amount of money in gold, so the gold price times all the amount of gold in the world, it's about a $10 trillion market cap. So at the peak here, Bitcoin was only 10% the market cap of gold. And a lot of people do believe Bitcoin can overtake that market cap of gold. So another 10x from this point. This leads us to the next halvening here, which would start in March of 2024. And we're looking at a peak in October 2025 and another 18-month period. And again, we don't expect the gains to be as big. It is decreasing, but still this would be a 285% increase approximately, which is approximately 4 times what you invest. And again, that's if you wait to the halvening date in March of 2024. You can play it a lot safer just buying at the halvening date, and you only have to wait 18 months to get all those gains. The gains won't be as much. We can see if we take this to if you bought Bitcoin now, we see the gains would be 740%. It's approximately 8 times your money rather than 4 times your money, which is still quite massive. There is more element of risk here. People don't like to buy something that has gone down for a whole year. But when we learn about the cycles, we can see this is normal. This was expected for Bitcoin even before the stock market started dropping. People following the 4-year cycle were expecting Bitcoin to go down over 2022 and drop approximately 70 to 80% like it did the previous cycles exactly 4 years ago. Even if we did drop a little bit lower, it doesn't really matter in the long run, but to get the most out of this cycle, you do need to hold Bitcoin until 2025, possibly to around October. And the market psychology works in a way that no one wants to buy Bitcoin down here at the lows, even though it's 70% cheaper than it was a year ago. They see it as it's just going down. Why would I buy that? And those same people will buy Bitcoin towards the tops here. They'll see, oh, look, it just keeps going up. I've got to buy Bitcoin. When they do buy it, they end up buying it near the top. It starts coming down. They say, I'll wait for a bounce to sell it. We don't get that bounce. It ends up quite low, and they may even end up panic selling at the bottom here, or a lot of them will just hold on to that Bitcoin because it's already dropped 80%. They're in maybe a 60% loss, and they wait for the next cycle. They learn the lessons of this cycle, and then they end up selling at a decent price, but they do have to wait that extra 3 or 4 years. So the smart money buys at the bottom and sells at the top and doesn't follow the herd, which will jump in when Bitcoin is going up quite quickly and they think it's going to go forever. And no one wants to buy down here because they've seen it go down for a year. And that's how market psychology works. But I think this video is probably long enough. Hopefully that was a good explanation for people new to Bitcoin, people that didn't know about the cycles, people that didn't know about halvening for Bitcoin and mining and how that works. It was still just a basic understanding. But I think if you can get all those concepts, you can see why it is a very good investment. There's no other asset where you can make those sort of gains in a short time. The stock market might give you 10% a year on average. And so to double your money could take 10 years. And basically, it's just keeping up with inflation. Things have doubled in price after 10 years. But with Bitcoin, you can 8 or 9 times your money in a 3-year period here. So I think that's about all. Hope you enjoyed this video. I'm Bitcoin Mamo. Thanks for watching.